Well, I posed the question to a guest earlier on at the desk today: a dead cat bounce or the start of a market correction?
Oh, very difficult one, Alishia. There's so much volatility around. I think that the market has sold off aggressively. It's very oversold at the moment, and definitely is in need of a little bounce. If you take a look on the technical levels, they have broken very, very big support lines, and there is possibility of another 10% on the downside if these markets don't correct quite soon. So I think we definitely do need a bounce. I think that the bounce will hold, in my view, and that we will start to recover from these levels.
Well, amidst all the uncertainty, Rob, volatility is certainly up. We had, of course, the JSE saying yesterday that it achieved a record number of trades, the new record sitting 12% higher than its previous one, which was set on June the 17th last year. What are you making of the kind of market activity we're seeing today?
Yes, well, the markets have been relatively depressed on volume terms for quite a long time. So this increased volatility has definitely brought extra volume into the market. It's very positive for a company like the JSE, which really makes its revenue from the amount of volume going through. It's good for the trading desks around the country and around the world as well. So the volatility is good on the trading side of things. Volumes up and revenue up. So I think it's very good on the trading side of things. Obviously, after the volatility settles down, is there enough appetite for long-term trading still? And that's what you have to wait for. But currently, I think it's good that there's volatility. We were starting to flatline a little bit, so this volatility was definitely needed, and we have to see where we go from here.
Well, all the global news aside, quite a few companies out with numbers today. Standard Bank amongst the lot, an 11% rise in first half profit being reported there. Credit impairment charges falling sharply to just under 3 billion rand, and much of the same trend that we've seen with the likes of Nedbank and Absa as well. Your overall impressions of those numbers?
We're just looking at them briefly. I think they're quite a good set of numbers. The banks seem to be making a lot of money just from the amount of debts that are being reduced. So a lot of the revenue coming from impairments, as you said, reducing. The growth side of stuff, good growth on their personal and private banking sides and corporate banking. So I think they had a bit of growth in that corporate banking side, which is quite positive for them. Still battling a little bit in Africa. They have sold their Argentinian business as well, which they've got some good flow in from. So they've also just got rid of a lot of their costs, so the cost structure is much better. Looking relatively solid, still battling for new growth. But overall a good set of results.
So you're positive on that cost structure because, this has been a major challenge for the bank, reining in on that cost base after aggressive expansion in Africa and other emerging markets. We've got that cost to income ratio still sitting at 58.6 from 58.2. So are you happy with the kind of stride it's making in terms of reining in those costs?
Yes, I think they've got a lot of structural projects on the go at the moment, running in costs. I think that will still reduce going forward. I think on the headcount side, they're probably settled where they are at the moment. Home loans probably still a little bit under pressure. So I think on the amount of employees they have, there'll be that cost pressure will stay. But they definitely have other cost savings going forward in Africa. And looking generally good for Standard Bank. Also, you're looking at them now at around the 90 Rand level, whereas you were looking at them at about 110 Rand. So, looking much better around these lower levels.
In terms of offering value, of course, talking about players that have to contend with escalating costs and reining in costs, we've got gold miners front and center, and Goldfields out with numbers today as well. Total cash costs there coming in at $816 an ounce compared to $751 in the previous quarter. But interestingly enough, we've had CEO Nick Holland say that if you discount electricity costs, that would have actually come in flat. What's your view on a player like Goldfields?
I think with the gold price where it is currently, I think they managed to eke out a 5% increase in their production. With the gold price $1,800, I think they're looking very good. They're generating a lot of cash, and I think it's something to definitely hold while gold is elevated at these levels. I think you can see gold being above $1,500 for a very long time. So you've got a $300 play from where it's trading now in the $1,800. So I think the gold miners with the cost like Goldfields of only $800 looking very good and generating a lot of flow. I would have liked to have seen the dividend a little bit higher up. They declared a dividend of R1. I thought that with the amount of cash flow that they are generating, that dividend should have been a little bit higher.
Of course, gold miners have benefited from the equities rout that we've seen, while platinum miners are amongst the worst performers on the top 40 so far this year, as of course concerns of global economic recovery plague. We've seen Aquarius Platinum out with numbers as well. Have you had a chance to look at those numbers, Rob?
I briefly looked at those as well. They've maintained their costs quite well, and revenue jumped, I think it was 5-fold, so very good for Aquarius Platinum. They had really coming off a low base and were really battling last year, so they've corrected a lot of the problems and structural problems that they had. They've got safety issues that they had last year, which they've corrected. So overall looking really good. I think the platinum price as well, very elevated at the moment. And if they can get those sales out and sold in, there is a bit of investment coming into platinum as well, not just vehicle sales, which use the catalytic converter. So all in all, I think a very good set of results for Aquarius Platinum, and let's see if they can carry on the increase in production.
If you had to put gold miners next to the platinum miners, where would you be delving in first? Because many saying that they're starting to see the value in platinums right now, and that more so from a qualitative perspective.
Yes, they're definitely showing good value, the platinum mines at these levels. They've been depressed for a long time now. The problem is that the money flow into them has just been really, really stagnant, and the asset managers don't seem to be buying into those assets just yet. I think if you started picking them up now, you'll be probably one of the first in the early money in. If you've got some money to spare after these volatile markets, you would start to pick up the platinums more than you would the gold miners. But I think it's a slightly longer term plan. You'll probably see a bit of increase in those miners maybe in only 3 months' time once the volatility settles down.
Well, talking about being the first in the early money in, we've had only a few daring enough to be delving into the construction space, and I guess warranted, where you're seeing numbers like you are come through to the markets. Basil Reid coming out with a trading statement today saying that first half headline earnings per share are expected to be between 20 and 30% lower, and following on from what we saw from WHO not so long ago as well. Your view on the construction space at this stage?
Yeah, very difficult for the construction companies at the moment. The big projects are over, and they're battling to get new projects from government. There still is quite a bit of construction on the road side coming through from government, but big infrastructure projects are a little bit slow to get going. They are in the pipeline, and they're waiting for those infrastructure projects to come through, but currently a bit of a lull on the local front. And they really need to have a book that goes into Africa. So they need to be doing projects in Angola, Mozambique, etc. So if they get those projects going, those are the companies I'd look at to put my money into first.